Hello and welcome to LCG's look ahead to the key events in markets for the week starting January the 9th of 2017. Now it's the second week of the new year and we've already seen some interesting market moves. Now the US dollar finished lower last week as non-farm payrolls slightly missed expectations. The offshore Chinese yuan traded with LCG as dollar yuan saw its biggest two-day move since its creation. Stock indices, including the FTSE 100 and the Nasdaq, made fresh record highs. Last week, the US dollar index hit a fresh 14-year high before dropping to its lowest since December 13. At the same time, the major currency pairs are showing sign of a reversal. Euro-dollar stalled at 1.0350, pound-dollar held at 1.22, and dollar-yen has put in a short-term top at 118.50. Now, the most notable movement against the dollar came from the Chinese yuan. Dollar yuan dropped 2.5% in 2 days, falling to a near 2-month low in the process. Indeed, this sudden belt of strength in the Chinese yuan, or renminbi as it's also known as, is impacting the strength of the dollar. Now, the moves in the yuan came as a response to the ongoing Chinese government crackdown on currency outflows, otherwise known as capital controls. Now, December saw the biggest outflow of Chinese currency on record. But why? Well, higher labour costs and slower economic growth is attracting less foreign investment, and Chinese companies are investing more abroad. Now, China still runs a large trade surplus, but this is also beginning to reverse. This change in the flow of currency is being reflected in the exchange rate. The drop in the value of the yuan then encourages more money to flow out of the country. A drop in the currency is generally desirable for exports, but if it drops too fast, it can be destabilizing to trade and investment. China can either prop up its currency by using its foreign currency reserves to buy yuan, or it can introduce restrictions on investors and Chinese companies sending money overseas. The result is likely to be a devaluation of the currency over time, with occasional bouts of intervention causing huge swings either way. Now, this week, economic data from China could be a catalyst for further moves in the yuan. On Tuesday, China reports inflation data, then rounds off the week on Friday with an update on its trade balance. LCG senior market analyst Jasper Lawler tweeted a technical analysis chart of the day on December 20th, warning of a potential double top in dollar yuan when the price was at 6.94. The following chart shows the break of the neckline at 6.85. As we speak, the price sits at 6.83, and if the pattern's objective were to be hit, could hit 6.75. Now, stock markets remain enamoured by the growth potential of the US economy and potential corporate earnings boosts from lower taxes and lighter touch regulation under the new President Donald Trump. Now, most major indices traded in a tight range near 2016 and in some cases recorded record highs in the first week of 2017. At these elevated levels, any external shock can cause a big pullback in stock markets, but so far there has been no evidence of a trend reversal. There are a number of corporate earnings next week, with Biffa, Games Workshop and SuperGroup providing updates in the UK. Over in the US, it's the beginning of the fourth quarter reporting season, kicking off in the United States with reports from top banks like the Bank of America, Morgan and Wells Fargo. Another driving of individual share moves and perhaps the overall indices will be the Twitter account of the one and only Donald Trump. Now, his focus last week was on big automakers with tweets against General Motors and then against Toyota. Now, there's a good chance this will be followed up by tweets against the likes of Fiat Chrysler, Volkswagen, Hyundai and Nissan. Let's have a look at the chart for the UK 100, LCG's proxy for the FTSE 100. This is a weekly candle chart to remind us of the bigger picture. The index has broken above the record high set in 2015, but remains susceptible to a false breakout. A weekly close above the former record high acts as some confirmation the breakout is real and could set the UK 100 on course for 17,500. Now, that's all for the week ahead. Have a lovely weekend. Good luck trading next week, and we'll be back next Friday. Goodbye for now.